So, guys, the stock market's all in a bear market. S&P, Dow Jones, Nasdaq. Britain just recorded 0.3% negative GDP. The US will bring it out soon. They're predicting 0.9% positive, but I think it'll be lower. The yen is at 135 to the dollar, which is a 30% decline in less than a year. That's insane. And we're inches away from the 2-year Treasury bond being higher than the 10-year, which would basically mean inverse Treasury yields, which has predicted 10 of the last 11 recessions, meaning every single time it's inverted, including in 2018, 2019, we had the 2020 crash, and we also had the inversion before in 2008. Every single time we've had an inversion. We're nearly there. It's going to invert. And then that's it. We're on our way to complete catastrophe. But there's one thing that we've still missed. And there's one massive market that people have missed. No, it's not crypto, which is already a disaster. We're talking housing. So housing, we've explained before, it's gone up in America. The 30-year fixed rate mortgage has gone from 1.5% a year ago to now 5%. So how could it jump so much when interest rates really have not gone up that much in America? It's only gone up 0.75%. That's nothing. How could it jump so high? And the answer is it's actually not really related to interest rates. It's related to the biggest scam of them all, the one that caused the 2008 financial crisis. Mortgage-backed securities, as I've told you before, mortgage-backed securities, as you all know from The Big Short, Michael Berry, is when they package junk along with good mortgages and sell them on. Now, as I said, no one was buying them. The only buyer that we've had for the last 2 years, just like for treasuries, the only buyer that we've had for the last 2 years has been the Fed. They're the only ones buying them. They were buying 40 billion a month up till November last year, and that's when it started going up. That's when it went from 1.8% to 2%. Nothing. They hadn't raised interest rates. January, February, still hadn't raised interest rates. Up, regardless of the interest rates, because what was happening? They're basically buying all these junk mortgages that, these stupid banks giving out to whoever at ridiculous ratios, and the Fed was buying them. Now there's no one who wants to buy them because they all want a return on this highly risky product. I'm not going to give you 2% for some highly risky product. They need 5%. They need higher and higher and higher. And to double that, the Fed has said they want to reduce their balance sheet. Quantitative tightening, they're starting this month, supposedly. But they've said even more specifically that they want it to be only treasuries. They want to get rid of their mortgage-backed securities. So they're going to try and sell these mortgage-backed securities that they bought for 2% in a market that's already at 5%. And the second they start selling them, it will go even higher because the more supply you induce in a market, the higher the interest rate has to go, because there's so much here. Why should I buy it? Give me more money. If you want me to buy it, you have to pay me more money to buy it because I've got a load of options. If it's very limited, you don't have to give me so much interest rate. If there's a huge amount of supply, then you have to give me, clearly it's a risky product, all right? So that is only going to go higher, and that basically takes that US housing market. As I said before, I don't think other countries have it anywhere. They didn't have this mortgage-backed security lark rubbish, so I think they're actually pretty good. But the US housing market, wow, that is in for Armageddon, guys. Real Armageddon is coming up if they really do start selling these mortgage-backed securities. No one wants to buy them. They know they're junk. You're selling into a market where, number one, no one has any money for new mortgages. Luxury home sales, by the way, are down 30%, the highest reduction, in years. 30% luxury home sales are down since the beginning of the pandemic, when they went down a lot as well. So it is really going to be interesting to see what happens. But that is the last chip. I think that will fall. And again, all Fed induced. They know this is going to happen, and they're specifically doing it. As another aside, I don't think they need to increase interest rates that more. I think even 2% and the job is done. People are, we've seen, people, tech is finished. Everything is finished. I think 2% is as far as you go. Unless they want a severe recession, they'll go high. Now, obviously, it robs people of money, and it really shouldn't be 2%. It should be 9%. We know that, we've explained it before, but I'm saying in realistic terms, unless they want to cause a massive depression, 2 is as high as they can go. That's how bad the economy is.